Welcome back. It's time now to take a look at what's making the business headlines. In our top story, the UAE is close to setting up a secondary IPO market and a board specialized in trading shares of small and medium-sized firms, according to Dr. Nasser Saidi, the chief economist of the DIFC. He stated that SMEs from the region show more and more interest in accessing additional funding by going public. Also, there had been a strong interest from international institutions that would invest in those shares. He added that the DIFC is looking at both the regional exchange and also local markets in different countries. Saidi stated that an announcement on the matter will be made in the next couple of months. Global Islamic insurance premiums are forecast to reach $12 billion by the end of the year and $25 billion by 2015. That's according to experts. At the International Takaful Summit held in London, experts predict that the growth rate from 2009 of 31% continues, then the $25 billion mark can be reached within the next 4 years. A strong growth in the Islamic insurance sector is expected to continue. Although the market makes up only 1% of the global insurance market and is mainly focused on the MENA and Malaysian markets, there is huge potential for future growth in markets such as Indonesia, which has the world's largest Muslim population, and also India. Today, the UAE, Saudi Arabia and Malaysia are the 3 largest Islamic insurance markets. A group of second quarter earnings results were announced in the UAE today. Dubai logistics firm Aramex posted a 3% rise in second quarter net profit of 56.5 million dirhams. The National Bank of Abu Dhabi, the UAE's second biggest lender by assets, raised its Q2 profits by 2.5% to just over 1 billion dirhams. The Commercial Bank of Dubai said second quarter profit advanced 2% to 260 million dirhams, while Finance House in Abu Dhabi reported 48 million dirhams in the first half of the year. With that, let's now take a look at what's making the headlines with the stock markets. The local and regional equity markets, the UAE's 2 main benchmarks, ended mixed today. And in our world business news, Germany and France reached an agreement on addressing Greece's debt crisis at the EU summit held in Brussels today. Euro region governments may guarantee Greek bonds should they agree to put Greece in a default. Policymakers would try to keep the period of default as short as possible. That would make it easier for the European Central Bank to accept a default, continue funding the country's banks, and sign up to a new package for the country, which is a key step in stopping Europe's debt crisis from spreading to its larger economies, Italy and Spain. To talk about this further, we're now joined by Bruce Powers, Head of Research at Trust Securities. Welcome, Bruce.
Thank you.
What do you think the ECB would do should Greece be put in default or even just selective default?
Well, they're going to be part of this process, right? So they have something to do with them going into default. I think that a default is going to have negative ramifications throughout the Eurozone as well as probably the world financial systems, because there's a lot, once you default, you impact the rating, and therefore all the holders of these bonds, in many cases, have to get rid of these bonds. A lot of the bonds are held by banks in the Eurozone, so those banks and the credit worthiness of those banks are going to be put at risk. So even if the default is for a short time, you're still going to have the negative reaction, I think, in the markets and the negative impact in the financial system.
Now, the EU is not the only one to have a debt problem. It's also the US. The US Treasury said the only way out of the debt crisis is lifting the debt ceiling, and that very soon, of course. Is that really the only way out?
Well, I think so at this point. There are bills that are due and they have to be paid, and the only way to pay them is to borrow more money. Now, there is some talk that they may agree to some short-term borrowings that would cover them for a few more days beyond the August 2nd deadline. This, I think, would just prolong the agony in the financial markets. And they still have to get an agreement beforehand. They would finalize the details over those extra days. But I think that that puts the situation a lot more risk, because what if there's a problem during that time? What if they have some other issue that shows up? Bottom line, I think they're still going to come up with an agreement in time and everything will be okay, but it looks like they're going to take it down to the wire.
Thanks for coming in today. Thanks for your insights, and have a good weekend. Bruce Powers. AMR Corporation, the parent of American Airlines, said on Wednesday that it is ordering a combined 460 new airplanes valued at $40 billion from Boeing and Airbus, the largest purchase in aviation history. The deal gives Europe's Airbus a new toehold in the US market and forces Boeing to put a new engine in its best-selling airplane. The order will see the purchase of 200 Boeing 737s and 260 Airbus A320s. Boeing salvaged its portion of the order by offering to put a new engine in its best-selling 737, retreating from a more ambitious plan to completely redesign the plane. Boeing has been putting off the decision on how to upgrade its 737 for more than a year. Before we go, here's a quick overview of the oil and currency markets, and after that we have the day's sports news for you.